Good morning, everyone. Today is Monday, the 8th of April. Welcome to a brand new week. My name is Chris from Skilled Wealth on behalf of the Money for Life program. The purpose of this recording is to have a look and see what's going to happen potentially for this week moving forward in the markets, considering that April so far, the very first week of April, has been extremely positive. For those who have been following along with regards to my market updates, you will understand that April being the first month of the new quarter, in any bull year, the first month is always typically a fantastic period where we can make some really good money where the market continues to advance. Let's recap on where we've been for last week, and then that will lead us into what our expectations will be for the remainder of this week. Let's have a look at the S&P 500. Okay, so as we can see from our chart here, the S&P 500 closed out on Friday night up 13.3 points, a fantastic end to what was a unbelievable rise during the week. The market actually rose a lot quicker than I expected that it was going to. We were originally looking at the 2.8 mark, and then it was going to be the 2.815, and then it was going to be the 2.845, and we end up closing at 2.892, which is absolutely sensational in terms of the advancement for the market in a period of 1 week. We can see that by midweek, the market, having obviously moved up substantially, actually had a couple of down days, but even though they were down, they were actually up. And down meaning obviously that the value of the share closed lower than the original opening price, but they still managed to close higher than the day before. So it was more of a sideways movement that sort of occurred toward the middle of the week, as if the market was pretty much taking a breath, and then it just continued to move forward. From this point of view, and late last week, I indicated to my clients that the target that I had for the S&P 500 for the remainder of this month was actually 2909, and as we can see here, we're at 2892 at the moment. I've now revised my targets where I actually think that we'll hit 2909 later this week. Possibly tonight, the first trading session that occurs, although I'm sort of more inclined to think it'll probably occur by Tuesday. Once we hit that 2909 mark, we're really going to start accelerating quite quickly, and I anticipate that by the end of April, at some point in this month, we will have actually hit the magic number of 2945. Okay, so that's actually my new target for the remainder of April. At some point during this month, we will hit the high of 2945. That's my expectation. Again, the reasons for this is that we are in the first month of a brand new quarter. We are in a bull run at the moment. There are only a couple of obstacles that really could get in the way of us reaching that particular target. The first is we're only a week or two away from earnings report season starting again. I don't think that might actually hit us in April. I think really if there's going to be any negativity that comes out of the earning report season that's coming up, it'll probably be more in towards May. May, in terms of seasonality, is one of those months where the old adage comes in, sell in May and go away. So I think that there'll be a fairly large run up leading in toward May, and then May we really will see a bit of a sell-off in the market. And it's for those reasons again that I'm really sort of looking at this 2945 mark as being quite achievable. Of course, the S&P 500, the direction that it takes, 70-75% of the market will take that direction as well. So any shares that are showing bullish signs, that's an upward trending stock, as the S&P 500 continues to run, you really should be looking at making the most out of those particular positions that you're either in or those stocks that you're following as well. What do I mean by that? I mean that if you've got a stock that's upward trending and the S&P 500 basically it follows that particular direction, you could be looking at simply buying the stock and going long on it. So that's a buy hold type scenario where you buy the stock, hang on, and then sell at a future time for a profit. You certainly could be looking at doing covered calls, again buying the underlying share, pre-selling that share and deriving an income up front for it. That's very, very important. And of course, for our spread traders, you should be looking at any put spreads that you can get in on this one. And for the option traders that are out there as well, you might end up looking at the idea of buying call options. Of course, the call option will increase in value as the rate of the underlying share increases. For the put spreads, of course, as the share rises, the value of those puts decreases, and of course the difference between the two is the margin, and that's the profit that we make. So there's some fantastic opportunities that we have available to us in this marketplace right now. In terms of downside, 2845 would be a concern. I see that there's some support at 2845. From there, the next level of support would be back to the old resistance box level of the sort of 2820, the 2815 mark. I don't see that necessarily playing out this week. As I said, I really do see us probably either tonight or certainly by Tuesday hitting that 2909 and then 2945, which basically takes us back up to the all-time high, a reach back in September for the S&P 500. If we're to have a look and see what's happening at the moment with regards to the futures, we can have a look very, very quickly. Right now we can see that in Asian market or Asian trading, we're only down 3 points. Futures for the S&P 500 2893, 3 points down is very, very flat, almost negligible, to be completely honest, as far as the S&P and therefore the SPY are concerned. It'll be interesting to see how the European markets open up tonight. Of course, in a few hours' time, when they open up, that'll give us probably a bit of a better understanding as to the direction that the market might take tonight. And then, of course, when the market opens up, in the US, the cash market opens up, that obviously will be the real tell in terms of which way this market will go tonight. For now, I'm very much on the sidelines. I want to see how the market opens this week. If it gives me the sort of signs that I'm thinking, then we certainly will be put spreading, buying and holding and or doing cover calls. We'll be making money out of all of those strategies as the market moves forward. Some of the things that we need to still consider on the table, particularly in terms of headwinds: China trade deal. Any news item that'll come out, pretty much the same old. It'll move the market one way or the other. Earnings report season obviously coming up. That's a bit of a concern, although I do tend to think that April, particularly being the strong month, we'll see a lot of buying come back into play. We should start to also see the effects of what I call FOMO. FOMO is the fear of missing out. There are a lot of people who haven't been buying into this market recently because of the fact that the market's been tracking up so nicely. We can see that that's been such a large increase in such a short period of time, even in the last week or two, that there will be investors out there who have been holding off, waiting to see if the market actually will retrace and start to come back down again. They're probably starting to get a little bit antsy now in that they've got money sitting there and they need to invest it somewhere. And I think that all of the good signs that are showing at the moment, that fear of missing out, should see some money come back into the market. Of course, when that happens, money coming back into the marketplace, that'll start increasing values in the stocks and the shares, and of course it becomes sort of self-prophesizing from that point on. If people think they're missing out and money starts to pour back in, the market will obviously do very well from that. All of this, of course, leading into, as I said, the situation in May. The old adage, sell in May and go away, still holds very true today. It's a pattern that has occurred for many moons, many years, going back 30, 40, 50 years in the market. So that's just something that we need to consider ourselves. A bit of a lead up until then, and then May we'll start to see a little bit of a wash off in the market anyway. The trade deal, as I said, is probably the most important thing that's going on. We've already gotten over the Brexit issues in terms of it being kicked down, the can being kicked down the lane. Of course, the 12th of April, which is later on this week, on Friday, is another deadline that the Brexit people have to sort of get over. nobody really knows how it's going to end up, and I think the market's pretty much factored in that uncertainty to some degree anyway. The closing of the southern border in the US, that's not going to happen. Donald Trump has pretty much closed the door on that idea, so again, that uncertainty's been taken off the table. So there's a lot of positives that are out there. There's a few negatives that we need to be concerned with, but in terms of where we are right now, of course, we don't want to necessarily predict what the market's going to do. We actually want to wait and get the information directly from the market. Let the market show us what it's going to do, and then we can take the right action from there on. That's it for me. Have yourself a great week. I'm really looking to consolidate on some real profitable trading. Last week was sensational. We did some great trades on Amazon, Lulu, Baba, Apple. Apple was a fantastic one, and of course the SPY, the SPY, really paid out in spades for us last week on a number of different trades. We had some awesome returns in terms of our covered calls as well. A couple of weeks ago we ended up with ANF, which did really well. CREE this week well and truly outperformed. AMD did very well. FL, we were able to close a position out on FL for about just over 3% profit on that one. So we're really kicking some very strong goals with our cover calls at the moment as well. So I look forward to continuing that movement forward, certainly for the remainder of this week, and I suspect for the remainder of April. As I said, that's it for me now. Look after yourselves. If you need anything, you know how to contact us. All the best for this week, and I'll speak to you on Wednesday for our mid-market update. Bye for now.